All right. Welcome, everyone. Good morning. This fabulous Friday, Good Friday, good fabulous Friday, right? Because it's Good Friday. Welcome, you all. Welcome, welcome. And I am excited for everyone to be here this morning for the free live day trading event here in the Trader's Crib. And today, what we are going to do is I'm going to show you guys all how I trade. We're going to go over some charting setups. We're going to go over how I trade. We're going to go over some mindset. We're going to go over what fundamentals and news I look at. It's going to be a real crash course into how I, Randy, here in the Trader's Crib, the host of the Trader's Crib, sets up my charts and trade and to help show you guys just how simple and easy trading can be with the right steps and the right strategy. All right. So I will be going over a bit of my strategy today. But first and foremost, as you guys, as my subscribed traders to the trading family know, we start every morning with mindset, meaning that we take a moment and we get our mindsets right, and we kind of look at some either motivation or positive quotes, aspirations to move forward towards, because it helps us set the stage for how we're going to trade for that day. So that is something that every trader needs to prioritize, is their mindset, okay? Because that is the biggest part of becoming a successful trader, is to control your emotions and your mindset, all right? So one way in which we do that, and there's many ways, but to help stay spiritually grounded here, we use The Daily Laws by Robert Greene to help us get started, all right? Because every day he has a affirmation type mindset that you should focus on for that day. And so if we take that book out and we turn to March 29th, because it's every day of the year, it is titled Fuse the Initiative with the Rational. All right? Fuse the initiative with the rational. And the Daily Law states, this power is what our brains were designed to attain and will be naturally led to this type of intelligence if we allow our inclinations to their ultimate ends. He has a quote here. Albert Einstein called the intuitive or metaphoric mind a sacred gift. He added that the rational mind was a faithful servant. It is a paradoxal that in the context of modern life, we have begun to worship the servant and defile the divine. So resonating back in that divine and that intuitive with the rational is what we're going to have to fuse together in order to obtain mastery. All right. So a lot of the market and what we do here in the Trader's Crib is we train you all to be professional trainers, profitable, successful female traders, and to master the markets. And so with doing that, a lot of our mindset does come down to what we need to do to master the right mindset for these markets. All right. So we always start with a mindset. And I'll leave that there for you guys with Robert Greene to dwell on that as we move forward to our next step in the call, which will be fundamentals. And in this segment, we're going to do a little bit of a wrap up of the previous week of what happened in the stock market, since it is Friday, and what to expect next week while we go through our normal checks and balances of the day that we want to just check in on when it comes to the news. I am not a trader that wants to focus heavily on the news. I am a technical analysis trader. Therefore, I only look at certain aspects of news events in order to just help me understand why my candlesticks may be moving in a certain way. But I am a heavy technical analysis trader. So For Forex, so what I tend to do is I start with Forex Factory every morning and I take a peek at what Forex Factory news events are upcoming for the United States only, right? So Forex Factory is a great tool to use to see all the events as far as economic data events upcoming for all major currencies throughout the globe. As we are stocks futures traders here primarily, we do trade Forex, but we focus on stocks and futures and options primarily. So I focus on what the United States is doing ultimately, right? And so here, what I do is I'll come to the calendar and I just look for the red folders. I only care about the red folders because those are the ones of the news events that are going to give me the most likely give me the most volatile move of the day, right? There are some days that we don't have any red folders, and those days sometimes can not do so much in the market. Sometimes, emphasis on the sometimes. So if I come to today, right, we start from where we are presently. It's Good Friday, so the only market that's running for us is the Forex market. Um, but we did have 8:30 core PCE price index economic data released at 8:30 today. We also have Federal Chair Powell speaking at 11:30 this morning, Eastern Standard Time, and he's due to participate in a moderated discussion with Kai Resdell in the Microeconomics and Monetary Policy Conference in San Francisco. So as he answers questions, we'll take that data and we'll assess it to see whether or not he's going to lower interest rates in May, right? So May 1st is the next federal funds rate announcement. And we would like all of the data from now until then to reflect that the Fed can now cut the interest rates, right? And so we're paying attention to all of these red folders that came out this week, and we're going to be looking at everything coming out next week. So moving into so this week we had final GDP. We had a very like quiet, I would say, red folder week. As we move into next week, into April, our first week of April, we'll have a little bit more action pretty much almost every day starting the first week of April. So Monday, Tuesday, Wednesday, Thursday, and Friday, we have a red folder. For those of you who are subscribed to the Traders Crib, that means we are having a full week of trading first week of April, and we'll be meeting every day to trade this red folder volatility or liquidity that the market may give us. Okay, so we like to meet routinely. What I'm trying to say, we would like to meet every day that there's a red folder as our live day trading community studies together and trades together every Forex Factory red folder day. Okay, so one thing I'm looking forward to into next week is our non-farm employment change on Friday. We'll see how this comes out to be, as well as Wednesday. Before that, our federal chair, Jerome Powell, is speaking again at lunchtime. So that should be a fun Wednesday. So we're going to have a lot of action. On Wednesday, we have the preliminary reports, ADP non-farm employment change in the morning pre-market, right? And then we'll come when the market opens with ISM to then follow up in the afternoon with Papa Powell. That's the nickname we have given him here in the Traders Crib. Speaks at the Stanford Business, Government, and Society Forum, and we'll see what that does for our afternoon trading session. So lots of action moving into next week, okay? Other fundamentals that I like to just take a peek at is I will just look at the headlines of CNBC and Benzinga. I don't want to get too deep into what the article is saying because they like to blow a lot of hot air up your behind when it comes to news and fear. Just to make the market have a reaction. So be careful of that. And this is why I only just pay attention to the headlines. So key Fed inflation gauge rose 2.8% annually in February as expected. So it just kind of highlights over whatever red folder news was released from Forex Factory with a few additional headlines. We're talking about Tesla and a few other things this morning, and some things are just not worth the market moving, right? But it is a news site, so it's going to cover everything. The other news site I tend to look at as far as headlines go is Benzinga. Benzinga gives you lots of other news sources as well. But Benzinga headlines this morning: inflation ticks higher in February is a May interest rate cut in the cards, right? So everything, like I said at the beginning, all the economic data is to lead up to that final decision May 1st if we're gonna cut interest rates or not. So we'll see what we do. Okay. Other than that, I don't see anything else worthy of my time this morning with Benzinga. Like I said, I don't like to spend too much time. One other thing I do want to peep into is the fear and greed index. It just kind of lets you know how everyone is feeling about the market, right? Are we in extreme greed or extreme fear? Usually, when we're tipping into fear, we're usually in a major sell off. But since we've been running up for weeks, right, we are in a great greed area, but been teeter-tottering between extreme greed and greed, right? As we've been running up the past few weeks here. Okay, you can use this tool to get an idea of how strong the trend will potentially continue with the emotions that are feeding the market. As you scroll down, you'll see other data like stock price breadth, call puts and call options, and you'll kind of get an idea of their average and if they're more in greed or in fear, right? Market volatility and things like that. So this is a great tool to just kind of give you an idea. I don't use it every day, but I do check it a couple times a month just to kind of see where we are headed and where the market is steadily at. All right. And that's about the most fundamentals you get out of me in the trader's crib. Okay. We do have a few seasoned traders in our community that add a bit more fundamentals, and I love that about them. Love it, love it, love it. But because we all have our own trading style here. And so the main goal here in the Trader's Crib is not to just copy trades and copy my style. I give you a foundation and then you find what works for you. You may like a little bit more fundamentals added to your trading, right? You may like no fundamentals at all. But whatever you like, it'll work for you as long as you don't give up and you don't quit, right? So we'll keep a positive mindset when it comes to learning how to trade. All right. So before I get deep into the charts, it's 9:15 and I want to get a real good charting basics. Before I do that though, I want to go over a few different little things with the Trader's Crib that are up and coming. Um, Give me 1 second here. And it'll be up and coming more like live by the end of this call. So one thing I want to show you guys is to help you all, like I said, the Trader's Crib focus is to help everyone become their best selves as a trader. All right. Not to get signals here, trading signals. That's not what we're about. We're about developing our skills so we can do this ourselves. And one way to help everyone do that is I thoroughly enjoy astrology. I have now come up with a way to help tap into your natal charts and how your birth chart from astrology is connected to trading. All right. And how analyzing your birth chart can help you figure out what trading style is best for you as well. Right. So for instance, naturally I'm a bit more of an impulsive person. I'm an air sign. I can be very whimsical and fly off at a toss of a hat, and just the breeze feels nice, and I'm gonna go over here and I'm gonna go over there, right? And so that makes me more of a day trader and a scalper a bit, right? In comparison to maybe let's just, for instance, say like a Taurus or one of my earth signs, a little more grounded, they may take a little more of a investor's approach to the market. They may swing trade and hold positions for a significant amount of time, right? While I don't hold anything more than about 2 days. Okay. So it just depends. Um, so your natal chart will really help you hone in on who you are, right? And so, as a service that the Trader's Crib is now offering, you can come to the website. This will be live by the end of this call. All right. You can explore on here and you can pick a chart that you want, a style of natal chart that you will want me to break down for you. It's your own personal chart. And what you will get is you're going to get an astrological drawing. So you see all your houses and your planets and everything, right? And then you're going to get a breakdown for every house and every planet in your chart to give you a unique picture of you. It's just you, right? And depending on how deep you want your chart to go, you can order the modern astrology natal chart, which is going to be a full chart, meaning it's going to encompass your sun sign all the way through your Chiron, right? Which is your like wounded healer planet. You're going to need all of those, Neptune, Pluto, all of them, right? To include true node as well, which is your life purpose, and to include your midheaven. Okay. That is going to be the modern chart. The traditional chart, for my geeks, nerds of astrology, know that the planets after Saturn were discovered later, later. So the traditional astrology chart is only going to be your chart up to Saturn, right? Those core planets that were founded by our original ancestors way, way long ago, while the new planets were discovered later, right? More recent years. Okay. So that's what your traditional chart will accomplish. Then if you just want a snippet preview of just who you are with your sun, moon, and your rising sign, the three major elements of anyone's chart and anyone's personality, you can order that and just get your sun, moon, and rising interpretations with, again, your astrological drawing. Everything will come with your drawing. So if you want to do more homework for yourself, you can. But that's the extent of interpretations that I can provide for you to kind of help you guys on your trading journey. Okay. So it's really deep. I've done my chart long time ago. And it helped me, develop the Trader's Crib actually. Oh, it gave me great insights into who I was, and that's exactly why I'm here now. Yes, you will need for your birth chart. Shirley, thank you for that comment. You will need your time of birth. So it is really important when you order, you need to submit your date of birth, right? Your place of birth and your time of birth. And you may have to go back into your birth certificate to find that information. Okay. So that will be live at the end of the call. You guys can order natal charts. All right. For those of you, just sidebar, for some of you who had requested a natal chart from me about a year ago, I now have yours ready. I'm just gonna throw that in there. All right. Yours is now ready. Took me a while to get a good system and a flow to figure out how I'm gonna put these out, but I got it. All right. So just let you guys know that, and I'll have conversations with you guys on the side for that. All right. So exciting new things to help us become the best traders that we can become. All right. All right. So moving on from there. What did you say? Us old people don't have times. Yes, I agree, Jacinia. When it comes to some of the baby boomer generation, depending on what hospital you were in, they weren't recording time. I wouldn't say it's not everybody. It just depends on what hospital, depending on what deep south southern hospital you may have been in, especially if you colored folk, right? Okay. That time didn't always get recorded, all right? But if you can at least get morning or night, you know, an interpretation can be done for you. So just let us know. Okay. All right. All right. All right. Before again, getting into the charts is gonna be our next step. But before I do that, I would like to welcome all the new faces in here, all right, that I see, as well as welcome my loyals to come on and just kind of introduce yourself, who you are, so where you're from, why you like the Trader's Crib, right? All that jazz. So first name, where you're from, why you began trading. We'll throw that in there. Why you began trading, your favorite things you want to trade, new person or old, you're answering what you want to trade. I don't care if it's stocks, futures, or Forex. Okay. What do you like to trade? And why are you here in the Trader's Crib and your interest? And if you've been here a while, why are you still here? Chilling with crazy old me. I'm good at what I do. But Lord, I have, there's a secret sauce to this space, and the energy and the vibes, keeping it high, keeping it quirky is what keeps us great traders. All right. So I can go around the room, or I can actually start with volunteers first. Because I know I have a few volunteers. I won't mind jumping on mic and introducing yourself. Again, your name, where you're from, why you began trading. Okay. Your favorite things to trade, and what you benefited most here in the crib. Do I have any volunteer, or why you are here today in the crib if it's your first time here? All right. So, any volunteers?
Okay. Hi. My name is Karen,
Hi,
and
Karen.
I've been here for a while. I've been a member for a while, and I really don't speak up. So I'm trying to get into myself, get more involved. I'm just getting into. I mean, I've been watching, just getting to starting doing things on my own. I want to start doing trades and move to futures, and I I want to be able to do things what I want to do instead of depending on a job and other people do. I want to start traveling and things of the sort. So another reason why I'm here. And I like the communication, being together with other women. So another reason why I'm here. And I'm staying here, I'm going to be here forever.
Thanks, Karen. I appreciate that. Um, you've been making great progress. Like I said, I really, really appreciate that. And where are you from again, Miss Karen?
Oh, I'm sorry. I'm in the metro Atlanta area, like right outside Atlanta. I've been here for 20, 30 years, but I'm originally from up north I'm from Delaware, but people do live
Mm,
in Delaware.
Delaware. I
Yeah,
didn't know that. That's nice. It's cold, but
yeah. So when I moved down here to Atlanta, I said, I wanted to come before the Olympics. I said, I want to get there before the Olympics and get myself established. So that's what I came down in 90, I don't know, 93 maybe? 94,
wow.
something like that. So,
Thank you, Karen. I appreciate that.
all right, thank you.
Mm-hmm. Does anybody else want to share who they are, why they began trading, why they're here in the crib, and what things they like to trade before I call people out?
I'll go next. Good
Hi.
morning.
Good morning.
So my name is Shirley. I am a semi-retired person. I live in Chicago. I've been interested in trading for many years. I belong to another group where I have learned a lot of fundamentals, and I'm been paper trading and some money, but mostly paper trading. And I'm starting to feel that I understand what I'm doing. I'm making a little money on paper. I day trade. I'm a Gemini, so day trading suits me.
I love the honesty there, Shirley.
Yeah, yeah, I figured that part out. Yeah, I don't like waiting a long time for things, period. So yeah, and I'm intrigued about a female group of traders. That's that's exciting to me. Sylvia introduced me to this group because she knows that I'm into trading. We work together sometimes. So yeah, that's why I'm here.
Thanks, Shirley. Where is Sylvia? Now that you said her name.
She's at home right now. She's in Alabama. I don't know why she's not on here,
Yeah,
but
that's what I'm trying to figure out. I'm about to come from it. So, just so you know, Miss
yeah.
Shirley, Sylvia's my aunt, right? And so I'm gonna
Mhm.
come for my auntie. Like, how you gonna
Okay, okay,
promote and
yeah.
then not be here, auntie? Like,
Well, I'm just glad that she made sure I was here.
I
Sometime
appreciate that.
last night I was up until 3 in the morning, so it was hard getting up. I'm not put together yet, but I'm here.
Hey, you know what you sound like? I have a few other traders in here, or they're on the West Coast in California, and we start this call at 9 a.m. and they're up at 6 with us. Like
Hmm.
when
Hmm.
you're trying to make that money and you hear and you got a group of ladies who are in here with you, you get up. You,
Yes, but I just discovered I can trade at night.
yes, you
So
can.
that I think that's going to be my thing because I don't like getting up early. I used to work at hospitals and 6:30 you got to be there and that's just brutal to me. So yeah, I might be a night trader.
I have no problem in that. I speak about it. I haven't hosted many calls at night yet, but I can look for it in the future to capture these night trades because I do futures at night all the time. I'm usually, waking up to profits is my type
Yeah,
of. I'll go to bed, put an order in right before to go to bed if I know it's going to do the move, and then wake up to the take profit already taken and
that's
just
even better.
yeah, I know. It's
Yeah.
just the great beauty sleep, the great beauty sleep.
Yes, and I do trade futures. That's what I've been doing, although I want to throw some gold in there too. Well, that's still
Okay.
futures, but yeah.
Which
Yeah,
futures
mostly S and
tickers do you prioritize, if you don't mind?
S&P 500.
Okay,
That's where I lean to. That's what I was trained on. So so far that's what I'm doing.
cool. Cool, cool, cool. Well, thank you, Miss Shirley. I appreciate it. I appreciate it. All right. Anybody want to go next and introduce themselves and bring a little life into the Trader's Crib this morning?
I can
Hello.
next.
Hi,
It's me.
Jasenia.
Um, yeah, I came because I did long. I was a hold buy and hold, and now I do futures because
Oh, wait,
as
Jasenia, who
Shirley.
are you? Where are you from?
Oh, originally a Jersey girl. Now I live in South Carolina. I used to work with hair, Broadway, movies, all that stuff. I'm retired. I have a part-time job, keep my mind going and busy, and just extra income in until I can really do full time, which I will be hopefully by the end of this year soon. Full time trading. And I have a lot of other resume things, but that's beside the point. I got into trading because I always bought and hold for many, many years, over 20 something years now. But I really do like the futures. I like the micros, and I like all of them: S&P, Dow Jones, Nasdaq, and I really would like to get into foreign currency because I've been following that a little bit. And yeah, I would love for you to do some night stuff because right now my schedule is all over the place. So
I know
I'm
I
either
see
home in
that.
the
It's
morning
another
or
vote for night stuff. Okay, I got y'all. I got y'all.
yeah,
Let's go on
futures.
night
I really
schedule.
like futures because you can trade a lot. Thank God they're closed during the weekends. So I'm probably going to change my work schedule to just do weekends only, starting in June, July. But that's why I like the Trader's Crib because I have learned a lot in a very, very short time. And you've also given, not just from you, but from other people in the crib, learning other people's strategies and techniques and their what they trade and their mindset. It really does help because sometimes you can see what you're doing wrong or what you're doing right, either or. So that's what I like about the Trader's Crib is that there's no judgment. We all win, we all lose, and we're all here to help each other. So that's what I really like about it, and the fact that we do give each other books to read and sometimes things that might help us with our mindset or our candlesticks, patterns, and that type of stuff. And that's it.
Thanks, Jacinia. Yes, the mindset is like the biggest thing I think you'll get out of here. Because we just feed off of each other and then we just keep things positive and, joke, as you guys already know. All right, I think I saw when Jacinia was coming on, is it Malia or Malay? I do not want
Yeah,
to murder your name.
Mylea. Can you hear me
I
okay?
can. Welcome. Nice to meet you, Malia.
Hi, nice to meet you. This is my first time here. I found out about the Traders Crib and another traders group that I'm in. And so when I heard about a all-female day trading group, I said I have to come and check it out. Um, Similar to Shirley, I'm also in Chicago. So hi, Shirley. And also doing my paper
Hello.
trading. And so I've been doing the buy and hold. I wanted to step my foot into swing trading for another source of income. So I'm doing the sim account now and trying to build the confidence to jump into my real account and like really get out there.
Yeah. So what tickers are you trading?
Right now, I am doing a lot of Etsy.
Okay. Okay.
Yeah, and
Options?
Nvidia. I'm playing around with options now.
Okay, so you're trading with stocks?
Yeah.
Cool. Etsy and Nvidia. Well, I understand why you traded Nvidia. I definitely know why you traded Nvidia. Ah, I don't follow Etsy as much, but I'm right there with you with Nvidia. Um, and those are like your main two tickers that you like to trade.
I would say, yeah, I just got kind of comfortable with the way they moved.
Nice. I mean, yeah, Nvidia for sure. Nvidia for sure. Understood. I do like fast moving tickers myself. Things that usually have an average true range of about, 5 or more, 7 or more, really makes me excited. The lower the average true range, the more likely I am to swing it. It's a little easier to swing things that aren't moving as fast. Um, but welcome, welcome. I appreciate you guys being here. Thank you so much. And shout out to Chicago. That's what's up for the Midwest. Y'all will never catch me there in y'all winter. Never. Never. I'm here in Florida for a reason. I don't do those snows. I don't do getting locked out of my car because of snow. I don't do that. I'm over. I used to live in Massachusetts. Y'all can have it. Y'all can have all that. Well, I appreciate you guys for being here. All right. Um, who else? Who else? Who else? Okay. This is recorded and I will be Tashana, I will post this. It will be for access on my YouTube channel as well, since this is a free live call. Gotta put us out there as a all-female day trading community. Yes, ma'am. All right. As we're doing welcomes here. Anybody else want to jump on mic and say hi? Anybody? Anybody? And of course, I want you guys to ask questions as we get into the charts, as I get into the charting style. Please don't be afraid to raise your hand and ask a question. In asking a question, all I would ask for you is to introduce yourself a little bit. You don't have to go in as much as we just did, but at least, say your name and where you're from, and then ask your question, right? So we can keep it lively in here. If no one else wants to share, and I'll come back and circle and call out some more of you guys later. But for now, I will head into the charts and the charting and the trading strategy a bit, so you guys can get a feel of what I look at. For those of you who had mentioned you guys are in sim, we're going to try to get you out of sim, right? With some foundational candlestick magic. All right. So let's see. We're gonna start with futures. And futures S&P 500 is my ATM machine as well. Okay. It's like you literally just ATM whenever you see like a 24-hour ATM, right? Like you can at night, in the morning, whenever you need cash, you just come to the S&P 500 futures and you make trades. Okay. So I like to start with a top-down analysis, all right? I also don't use any indicators, all right? So for those of you who may are coming from different trading groups, I'm not sure what you guys will follow, but I think all the information that you need is within the candlestick patterns that are there. I don't think you need anything else other than that. I do have one indicator on my chart. It is the fair value gap indicator, all right? For those of you who may have an understanding of smart money concept, a fair value gap is formed with a candlestick, with candlesticks, 3 candlesticks, okay? So essentially, I'm still not using any like indicators, no RSI here, none of that. No EMAs, none of that. I don't do none of that. It's just candlesticks for me. The only other tool I will use in all-time highs like we are is the Fibonacci. I love Fibonacci because Fibonacci is a scientific sequence. So I go from there. The reason why I'm like this is to give a little bit of background intro about me, Randy Michelle. I started my trading journey about 4 years ago now. It's even in 4 years ago. And went full time about almost coming up on 2 years ago, right? And maybe it started before that if I combine all investments and stuff like that. But as far as like honing in on day trading strategies, about 4 or 5 years ago, okay? And I went through all the different, EMAs, following all these different things, and I didn't think it helped. I started to recognize that the candlesticks and just understanding the trend and how the candlesticks move was the better bet. I did sign up for a course, which is where I met some of you here in the crib. That course gave me a foundation of options trading specifically, not really of candlesticks, but more of options, right? So I took that course from options. I got my footing. And then from there, I've just been advancing my skills and studying on my own. I don't follow a lot of traders. I just study a lot and read books and back test my own theories. I am a scientist. I used to work in healthcare as well. Whoop whoop for the healthcare people. I was a clinical research manager from National Institute of Health to working with orthopedics to working with breast cancer, genital urinary malignancy. I've done a lot of stuff, and research is my thing. I love it. So, which makes me a great trader because I could take all those research skills and bring them here to the market. Okay. So this is what I love to do. And this is why I have the Trader's Crib here. And for women, especially, always I can go through the stats of all the stats of why we're disadvantaged in paid disproportionately to men and all these other things. And this is why we just need a space for women. We talk about the markets, we come at a different approach. And then this community of women is something that I needed because trading by yourself can be boring and lonely. And sometimes I need somebody to hear me say, oh my God, my cramps are making me feel like I don't want to trade today. Like that's a thing, right? We're female traders. Like our menstrual cramps matter. And for those of you who are no longer menstruating, you're gonna worry about y'all in the I'll be there one day, post-menopausal women. Love y'all lives. Y'all just chill. I'll be there one day. All right. All right. So let's get to it. As far as the market go, let's go from a top-down analysis. And I'm using the ES June contract. And I know if I come to the monthly, you're not going to see a lot of data because it's just the June. And we have the continuous contract to show us everything that happened in the past. And I have a lot of lines already there that don't want to move just yet. So I'm going to come to this clean June chart and show y'all my psychology from here. Okay. So what I tend to do is I'll start from the monthly at a new month, which, just the end of the month. So it'll be a new month. And I look for the fair value gaps from a top-down analysis. And I usually will then take horizontal lines. I love TradingView, by the way. It's the easiest thing for me to chart on. And I just use horizontal lines and like square off those fair value gaps. So if we're on the monthly, right, and this is all-time high, so I have no fair value gaps at the top or at the left side of the chart. So I'll go with what I have. And what I have is, I would call them like support fair value gaps, right? And these support fair value gaps is what I'm going to use to create support. So I'm identifying support and resistance using the fair value gaps that are there, which are created by the candlesticks, so they're obvious. Now, if you didn't have the indicator on, this is the indicator I use if you want to write it down. FVG, Sam and Nephew, a lot of you guys come in the indicator here on TradingView and you type in fair value gap and it's not going to come up. It's only FVG. Okay. That's the one I use. And they'll just illuminate them for you. If you turn it off, you just have to do the hard work yourself. It's not a problem. Identifying fair value gaps is simple. All a fair value gap is 3 candles, a 3-candle pattern where you have 1 candle and the wick is like coming up on, like you have this first candle, I would say, let me try to get my words right here. Blah, 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 blah. Okay. You have the first candle, second candle, and a third candle. The middle candle is what you're going to pay attention to. And this middle candle, what you're looking for is for the wicks from the 2 candles on either side of the middle candle to not be touching. Any space that's not touching from these 2 wicks creates a fair value gap, which is an imbalance of liquidity on the chart. That's all it means. Imbalance of liquidity, imbalance of supply and demand on the chart. Okay. If you come down a bit and see here, there's another one that would be here, right? Because these wicks don't touch, right? They don't touch. And there'll be another one here because these wicks also do not touch, right? Wick to wick. The 2 wicks on either side of a long candle do not touch. The 2 wicks on either side of a long candle do not touch. That creates a fair value gap. All right. If the wicks are crossing, then you will not have a fair value gap like here. So if I turn that back on, there they pop up and I missed one. No worries. This one's a small one. But it's still there. It's technically the wicks don't touch. So there's an imbalance. All right. Now you do not have to mark off all of these. That's a little extreme. There's a little too many lines on the chart. I like to keep them clean. I like to keep my chart clean. So I'm only going to do what's most recent to current price. All right. I'm only going to do what's most recent to current price and maybe one level below that, so I don't have to come back and do it later. All right. Now I usually get a little fancy here and I will make my lines like different thicknesses and things like that to help me know where I found this level. And I also label it because that's not a bad thing to do. I label what it is. I actually just label that this line is a monthly, because I'm on the monthly time frame, fair value gap. And because this fair value gap is support at the bottom, I would consider if price was coming back down into it, right? If it's coming back into it, Then the top line is my open, right? If you imagine like a hole, like the fair value gap being a hole. Okay, you have the opening of the hole and the bottom of the hole, right? So this is gonna be my open and this is gonna be my close, or um of my fair value gap. So I will probably put monthly fair value gap open and then a monthly fair value gap close, right? And that just lets me know where I got the lines from, because what I'm going to do next is I'm going to come down to the weekly, because it's the top down analysis, right? And so that's all I have. I'm going to keep it clean and simple. I'll keep these 2 lines here. I'll just make them solid so I know that they're from a higher time frame. That's what I do. And then now I'm going to come down to the weekly. And I'm going to look at how these candlesticks align with what I just drew, right? From those fair value gaps. And I see how the candlestick patterns are, have bounced maybe, or created a bit of consolidation in certain areas, right? That's what I'm looking for. So now I'm gonna do the same thing on the weekly, right? And I'm gonna looking in between the lines I already have. So first I'm gonna start with what's close to current price. We have the week just ended, so this one will be here for next week, okay? And that's a very small one, but this is a weekly one, right? So this is weekly fair value gap. And that's all I'm doing is just pointing out all of these areas of imbalance, right? And the close. And that's how I get my support and resistance. I don't do nothing else. It's just candlesticks. Just keep it simple. All right. Weekly, fair value gap, close. All right. Now there is another baby one I think I saw. Oh, it's below. It's below my monthly. So this little one below my monthly, I'm not going to worry about it because it's below the monthly. And we know the monthly is going to be stronger than the weekly. Why? Because it's a higher time frame. The higher the time frame, the stronger the candlestick pattern. The higher the time frame, the stronger the candlestick pattern. All right. Or the stronger that level of support or resistance will be. All right. Can you explain the imbalance and why it's important in trading? Yes. So the reason why the imbalance is important in trading specifically is because those imbalances are liquidity that can turn into profit for us. Okay. So what we want to do is price usually will come back and rectify that imbalance, right? You can't have an imbalance of supply and demand. We need to level the playing field. So what that will look like in trading is a lot of times what we call pullbacks, or when price is coming back down to a previous level, or coming up to a previous high, right? Those are all times that price is trying to adjust itself. And in those moments, we can make money as price is trying to adjust itself. Maybe on the upside, we ride it up in that adjustment, make profit. Or was dressing itself to the downside. We ride it down and make profit that way. Hopefully it keeps it simple. All right. So now from here, since I don't really have anything left from the fair value gap, I don't want to point out any candlestick patterns yet. We're not getting against candlestick patterns. We're just focused on fair value gaps, imbalance liquidity, okay, of the market. So now let's come down to the daily time frame. All right. And we see from the daily where all those levels are at. Now we see our weekly open and close. It looks like our daily candles like came down and bounced right off that weekly open and came right back up, right? We also, as we come down and look at where our monthly line is, we had that whole bunch of chop right on top of that monthly level, right? So this is great support and resistance areas just from identifying the fair value gaps from a top-down analysis, I would say, perspective. Okay. So now that we're here on the daily, so I like to know, wait, when you label the lines as weekly, it shows when you switch to daily. Yes, that's what I want. I want it to stay there because I know that this line came from the weekly time frame. And I'm on the daily looking at how that weekly level is aligning with daily candles. Did I lose y'all? Does that make sense? Okay. So I would from here look at other fair value gaps again. Now, in this case, since we're on the daily, all right, the bottom close of this daily fair value gap is below my weekly line. So I want to acknowledge that. And this is when the lines get a little more congested, and why I choose different styles of lines to differentiate between my higher time frames and my lower time frames. Is it important to label monthly if I only trade daily? Yes, because I can say that you can get away with it sometimes, just saying sometimes, but I'm gonna say yes, depending on where that monthly comes up. Because if, say for instance, let me come back and we can see it on another chart, okay? Because I'll ask you guys for some other tickers. But say for instance, the monthly fair value gap open line level, right, for a monthly fair value gap shows higher than like a daily one for whatever when you zoom in, then you know price is gonna be affected more by that monthly level before the daily level. Does that make sense? Virginia?
Yes, I knew the answer because you had said it before. I just wanted you to
Okay,
say
no
it for the
worries.
new people because some people don't know that. And I thought that helped me a lot when you said that, when you told me before.
Yeah, because that's really what it comes down to. Like for instance, here, this is one of those cases where it's like the higher time frame is closer to your higher time frame support is closer to current price than your lower time frame support from the candles perspective, right? Or the fair value gaps. And this is it right here. The weekly fair value gap is above that daily close. So of course, price bounced off of here first, right? Because it's the weekly, so it didn't come down here further. And that's why, it was only coming down so far. So now that it bounced back up and we hit an all-time high, so now from here that we're on an all-time high, I will acknowledge. Some of y'all are like, Randy, you're gonna acknowledge a high? Yes, I am. All right, because it's not supported by a fair value gap or anything like that. It's just a high. I'm just gonna acknowledge it as a high. I have nothing else to do but to just acknowledge the wick up there. Okay. The reason why I'm doing that from the daily is because my next, if I'm a day trader, I'm coming down to the 2 hour, especially for my futures at night. Ladies, we want these nice 2 hour trades, okay? Because these 2 hour ones can sometimes even take a day or two to do the move, but it gives us a clear move that we can make, all right? So from here, we have this daily. Now, I'm not going to acknowledge the opening of this because candles have moved in it. And when I come to the 2 hour, it's a lot in there, but you can acknowledge it for the sake of, and the reason why, I'll show you why I would and why, like both sides, okay? So a reason, I don't want to alert, I want a green, I want it because it's that lower fair value gap and then dashed. Okay, so I definitely want to label the bottom daily fair value gap close. So for when we go to the 2 hour. And then I want to label the reason why I would want to acknowledge this one, the opening, is because when I come down to the 2 hour or smaller time frame, this level can turn into support if price is going to stay up, right? So because it dipped down in there, that is one reason to acknowledge it. A reason not to acknowledge it is because it becomes too many lines on the 2 hour once you get down there. So let's leave it here and then I'll show you what I mean. So here's a 2 hour, all right? And now that we're down on a 2 hour, I'll answer the stop loss question in a second. On the 2 hour, I'm going to do the exact same thing. Acknowledge fair value gaps. All I'm doing is just keep acknowledging fair value gaps. All right. So now I'm going to use my little tiny dotted line for 2 hours, it's a smaller time frame. And I'm going to acknowledge the close of this one. And I could again acknowledge the opening, but we know it bounced in it around it multiple times. If you have the fair value gap indicator on like I do, you don't necessarily need to square off each line like I am, like especially ones that have already been dipped into like you're seeing here. Um, but it's not bad practice to see. That kind of helps you see what you're looking at. But the indicator itself will, show it for you, and you don't necessarily need the line. But I like the line there because what it does is when comes down to active trading time, all right? When you come down to active trading, price is moving, and you're like, ooh, let me get this. Ooh, the candlestick look like it's doing this. Ooh, I'm gonna jump in. Ooh, I'm gonna do that, right? I'm gonna do that, right? I'm gonna do that thing. Okay. Having the lines already there makes it faster for you to type in the take profit order because you know where your target is, because you have the line there and you see the price and you look at the chart and it's done. That's the reason why I like to put lines. Another reason why I like to is because ain't nobody got time for that in a real trade, especially when you know the people who trade the future, y'all know how this market can move. So ain't nobody got time for that. So it helps. Now, why I don't use stop losses? Because I don't use them. Okay, so do I use them? No. Why? Because they make me take a loss when I don't want to take a loss. Really what it comes down to is I use what I like to call stop loss alerts. Okay, stop loss alerts. So say for instance, I am betting on price to come down and fill this 2-hour fair value gap down here, right? Like it bounced in it a few times. It has kind of a reversal pattern up here, right? A tweezer top and price is coming down. And if price breaks below these wicks, it's going to continue down, right? I know that because I'm a candlestick guru. Okay. That's how they move. And if I wanted price to come down here, I would take profit, at the close here. So I was short. This will be shorting down to 52.81. I would have my take profit order here at 52.81. You would put a stop loss. I know where to put a stop loss. I know how to use a stop loss. I just don't like using it. So where I would put the stop loss would be pretty much right above this tweezer top bodies, the bodies of the candlestick. I would put it at the closest wick. I could even take it this further one, but if I wanted to keep it short and tight and I didn't want to have too much loss, I'm gonna maybe go just a little bit beyond. Why? I go a little bit beyond because you don't want the stop loss to be triggered. Duh, you're going to be at a loss. And so even though you trade with a stop loss, put the stop loss where just slightly out of the way. So if you know, okay, price is going to come back and retest the tweezer, because that's what price actually does. It retest the tweezer, but you don't want to be stopped out. So you want to push it a little further beyond that. And then set an alert. So what I do is I do a little further and I set an alert here. I will set an alert to let me know if it's triggered. I'll come in and look at it and see what candlesticks are forming and then manually exit. I don't want to be forced out of my trade just because price decided to do an impulsive, volatile expansion move, and it just decided to, like it did here, for instance, when it retested the tweezer top, it wicked past it, but it didn't keep a candle body, the bodies of the candle, it didn't keep that past it. So therefore, it was a failed attempt, and you would have just got I would have had a stop loss here. If you would have put the stop loss order in, this candle right here would have triggered your stop loss, and you didn't even need to be at a loss because price is still coming down. And I much rather have an alert here at that same level, look at it, and let me and my analysis say, I'm getting out because I see that price is really coming up and I have all the formations that price is not going to continue in my favor, or it did what we like to call also a stop loss grab. Remember, every order that you place in your broker working order, waiting order, pending order, all of those orders that are whether it's a take profit or a stop loss. The big players at hand, meaning we're the small fry retail traders, right? The big players can see those orders. They can see them. And one way that the money market maker movers, however I want to put triple M's on it, okay, they make their money by triggering those orders. Remember that if you're an options trader, it's going a little bit of options, right? The bid-ask spread will just, it actually is not just options. The bid-ask spread, period. The difference of that bid-ask spread is how the market movers make their money. Okay. So if they can see, oh, you have an order, you're willing to get out here. They don't care if it's a stop loss or not. They would take profit or stop loss. They just look at the fact that you got an order there. Oh, well, I can make money off of this order because of the bid-ask spread. So there's a few reasons why I don't use stop losses. Okay. For one, I know they try to intentionally take stop losses out on retail traders. So I don't want to put them in there. And two, when price does moves like that, it's a fake, and I don't want to be, I don't want an unnecessary loss when price just hit a level and just quickly turned around. All right, so hopefully that makes sense. Yes, Shirley, interesting, because then you get to read it for yourself. All right, I'm blowing up chat. Let's see what I got. And this is why we love risky Randys. Those fake pump fakes are trifling. I agree with you, Tandra. Of the 500 different candlestick patterns that are advertised and taught out there, how many do you recommend to learn? That's another good question. Okay. Maybe only like I feel like I just know them all, but like a solid 20 are going to be the main ones to really learn. And I'm not talking about just your 2 candlestick patterns, right? Some of you may know of like a bearish engulfing or a bearish harami or a tweezer top, right? Those are like 2 candlestick patterns. Those are fine. Those are great. Yay. But you need to know a few of those and more of these larger chart patterns like a cup and handle or a double top or a head and shoulders. These are your longer patterns that usually they're consisted of, I would say, like 10 candles or more. And they really let you know where the market is going. All right. And these are the candlestick patterns that I'm using to also help with this stop loss. So case in point, let's just focus on futures right now on this exact chart on the 2-hour. So looking at this chart right here, a trade that I would consider is for price to fill this fair value gap down. I'm using the same example. The reason why I'm saying price could potentially fill this fair value gap down is because it's a liquidity imbalance, and price usually likes to come back into these fair value gaps and pick up that liquidity before continuing in either direction it wants to continue. So say for instance, we continue down and what I'm trying to say. Okay, I would believe we will want to continue down for the larger candlestick pattern that I'm trying to get you guys to see. So for instance, some of you may have first thought, oh, it's a little W, and you can see, let me use my little trend line. Okay, y'all, let's draw on a chart. There's a little cute W right here, and it's a double bottom, and we know that double bottoms mean bullish and price is going to go up. Now, as you start to learn these candlestick patterns, you start to recognize the size of it matters, right? Size matters, ladies, size matters, haha, right? Okay, so it matters on these candlesticks. And when it comes to this is a baby W. And because it's a baby W, I had a feeling it wasn't going to stay as a bullish W and go up. So what I'm looking at here is I see that. Then I see it trying to break out and it forms a tweezer top. Then upon the tweezer top, it tries one more time to come up again and then pulls down. So within this pull down, right, it's forming. So we got a little W, but we got kind of like what I want to call a head in here, kind of like a head. And then if it bounces around and create, say, like maybe like a little M here, you would kind of have a larger pattern called a head and shoulders. All right, if that makes any sense to you guys. Literally head, shoulders, knees and toes, knees and toes. All right, we all know that song. And if we get that, that is a very bearish pattern, okay? And it's gonna take a few candles to form. But then when we see it, we know we have that strong level of consolidation where it chopped up, it came up high, came back down again, chopped, and now it's gonna break down. Okay. These are the candlestick patterns that help you confirm these stop loss alerts, whether you're going to take it, because whether you're seeing it as a reversal, coming down or coming up, it's the same thing that you want to look at. You want to look for these larger patterns here, of breakout. And so what we are going to now kind of segue into with that explanation is these chops, these candlestick choppy area, or these that what they like to call just chop. But if you take a closer look, they form these patterns called like head and shoulders and double tops and inverted cup of handles and things like that. You recognize a larger game at hand called order blocks. All right. So we talked about the fair value gap, the imbalance, right? Market just shot up or down. We have this imbalance of supply and demand. What the order blocks are the chop. Don't trade the chop, right? They say don't trade the chop. What they're really saying is, oh, the big players are making small orders, all chopped up little orders to make the market move in a big way. So that's what an order block is. And usually when it's done, we get another breakout. Is this on the smaller time frames only? This is on every time frame, the way I break down order blocks. So I know where you're getting that question from, Miss Shirley, because it's like it's talked about a lot on like 15-minute and smaller time frames, and I get it. So we can come to the 15-minute, but the definition of an order block is really what it is it's the Warren Buffett to the game making their big orders in small little chunks so they don't just run the market in either direction, right? Because if Warren Buffett, when he wants to do a couple million, right, if he did it all at once, it would just push the whole market. So what they do is they try to hide it. They can't hide it very well, but in their efforts of hiding it, they use what they call block houses. And the block houses segment their orders, segment that large $1 million trade into smaller trades. And when that's happening, it literally shows up as chop on the chart. The candlesticks get small, that's what that is. And it doesn't matter what time frame it's on, because you can be on the daily, right? And the daily chops for like 40 days and 40 nights is what I like to say. We get 40 days and 40 nights to chop, right? And then at some point, the dove comes back and we can trade again, right? This long ride on the arc. Okay. So all of that is the same. So if I zoom out to the daily right now, look at ES, and we come down, I come all the way back down here, right? Where this is really like what I would say, sideways, choppiness sideways, right? This was a couple days, quite a while. Not too bad, but it was quite a few days, right? And this is an order block. And then as soon as it was done, price broke up and continued to go up. Now, within that order block, you could potentially see other things like W's, right? That may be a little, some traders like to call it a bat. You can get funkified names for this, okay? For some of these W's, but either way, it's there. All right. The lows got higher and then it broke out. So you can look for these little signals within the order block right before it breaks out. All right, to help you position for the breakout. And the 2 hour will help you see it as well. So come back down to 2 hour. All right. So now, where do I want to go from here? As I'm trading fair value gaps and order blocks, and that's like the basis of my trading. Now how do I look for the best setups on a trade? Like, okay, how do I look for the best setups? Now I've been using this example just because the fair value gap is here and prices, bounced off of it. The reality is I don't believe that price will actually fill this fair value gap down to the bottom 100%. Why? Because it's chopped up around here a lot and I need more data. I need more candles. If it's going to give me a head and shoulders, I need that head and shoulders to show itself before I take it down. With all of this stagnation on top of the fair value gap, lets me know that this area is holding some support here for the moment. So I don't believe price is going to come down for this most immediate trade that you guys may be hungry and looking for the next best trade for next week. Okay, this one isn't it. Okay. Now, let's see. What I tend to look for, my secret sauce, okay, to the futures is finding where price wicked, like where you have a candle wick that went into a fair value gap and then left it, right? And you're like, Randy, wait, what are you talking about? I know. The futures took all my examples. We didn't got all the kids, okay? So I don't think I have one on S&P right now. Any of my experienced traders in the house know off the top of their head where we got kids in the fair value gap so I can explain this strategy. I know nothing on top of my head. I have one. Okay, let's use Disney because I'm in a swing trade for Disney. And I know I have one in Disney. Okay, let me use to explain this psychology. All right. Magical World of Disney. All right, here we go. I'm on the weekly of Disney now. I'm on the weekly, okay? So Disney's not at an all-time high. So this will kind of help for a non-all-time high situation as well, right? Because ES is at the S&P 500, God, is at an all-time high. So a lot of the liquidity grabs that I usually look for to trade are short-lived and harder to find, and I'm using a lot of Fibonacci to catch like the breakouts. Okay, so it's a little different trading psychology from all-time highs to not being in an all-time high. All right, so Disney is not in an all-time high, and it makes it great and easy to trade when you have fair value gaps to the upside, like so. So if we went into the monthly, let's do a whole top-down analysis here. All right, let's start for the monthly with Disney. We have the fair value gap. Let's start all over again. Do the same thing that I've been doing with these fair value gaps. And this one, I'll show you how I'm taking a trade on it because I'm in it and I'm gonna show you why I took it. But we're gonna do this. I do the same charting, okay? Monthly fair value gap. All right, open and close, top and bottom of it. You want to call it top and bottom, whatever word you want to put, do not care. It's your chart. I don't have to see it, as long as it makes sense to you. All right. I like open and close. A few of my traders in here do top and bottom. A few of my traders in here do dates and everything. They be like, oh, it's from the candle on March 27 at 2 p.m. Like they look, as long as it makes sense to you, so you can understand the strength of that line. That's the psychology, okay? The strength of that line. Let me do this one. So we got monthly, fair value gap close. We'll repeat it again. All right. I'm not going to worry about the ones lower. Now we have to the upside here, which is the exciting thing about Disney. All right. So here we have resistance fair value gaps, right? So I'm going to make them red, right? I like to make colors. You guys can already notice my chart candles are not the normal chart candles. I didn't speak on that much, but yeah, I'm a bit of a nerd and I have a daughter and her favorite color is pink. And so this is actually an off dark pink candlestick while my favorite color is blue. So so I have blue and pink candlesticks on my chart. You guys can get fancy with your charts as well, okay? And change candlesticks and all of that. So we're going to do monthly fair value gap. It's going to be inverse because it's the top. So my open, let's say like there's a hole in the sky, if you want to think of it that way, like it's coming up open, opening up at the top, right? And then the close on the other side. Again, however you want to label that, it's up to you, but it helps so much. Fair value gap, close, right? So I got a support fair value gap at the bottom and a resistance fair value gap at the top, right? Now, pay attention here just from the monthly. You see how these candles have left quite a few wicks within the fair value gap. Saying within it, meaning that this like if the indicator has blocked it off, so it's like a block there, and these wicks are within that fair value gap, right? So when wicks are in a fair value gap like this, that means price like came in, wicked it, and then there's no candle body left in it. There's no candle body left in it, right? I like to call it, for my mother's kids left in the fair value gap daycare. Okay. And what do you have to do when you drop your kids off at daycare? You have to go back and get them at some point, as much as you may not want to. It's the truth. You have to pick them up. They're your kids, right? So because you have to pick up the kids, we have to pick up these same WIC kids from the fair value gap daycare with price action, meaning price has to come back for that liquidity imbalance, right? And it left the imbalance and also left you a little clue to say, I'm going to come back and get you, right? Kim, are your opens on both bullish and bearish fair value gap resistance? So let me drop down a smaller time frame where we're coming in here. Let me get through this example, and I think I can answer that. Betters are not, they technically will kind of both be resistance. But I labeled it as open and close because price has gone into this fair value gap, and I expect this monthly fair value gap open to now become support. I do. So it'll make more sense, I think, as we come down. But I want to show you guys that psychology from the fair value gap. And as you can see, prices tried to come back for it a couple times and then got rejected out. And so each ticker moves differently when it comes to this. Okay. So you're going to have to get used to how your ticker leaves wicks and fair value gaps and how it chooses to come back for them. Sometimes it comes back a little later, but when I say come back for it, I mean come back to where it's going to put a full candle body through the entire fair value gap, like to the other side of it. All right. So if I come down to the weekly, this theory still stands where I have another set of kids, wick/kids left in a fair value gap coming up. So I have it on a monthly and a weekly. So y'all know I'm taking this trade because when you have the same type of confluence on multiple time frames, that's going to make your trade even stronger. All right. So we have kids left in the fair value gap daycare here again, and price is coming up for it. And this is a weekly. So because we found this on the weekly, monthly time frame, if you're playing options and you know a little bit about options, you're going to do what? You're going to buy time. You're going to buy a lot of time. So theta won't kill you. Okay. And eat away at your trades if you know anything about options. All right. And of course, you can ask me anything about options. I know everything about them. But you want to buy enough time if you're going to swing trade this with options. All right. Of course, with stocks, you don't have much to worry about. But with options, you have time decay. All right. And if we come to the daily, so we will mark this again. I can actually come in here and I can mark this one as a weekly fair value gap open, just so I can really understand my levels. All right. And how price is in there and should hopefully turn to support. Now, I want to acknowledge the fact that I have a weekly fair value gap close on the other side of this monthly close, right? It's further away. Why? Again, just like Jasenia said earlier, why do you want to acknowledge it all? Because that monthly is going to be a level of resistance before the weekly because it's closer to current price, right? So we want to acknowledge all of that. right? So because when it comes down to taking your profit, right? I'm going to get out at 128. I'm telling you what I'm going to do because of this. I'm going to get out 128 first because this is a monthly level. And when price hits that monthly level, it'll probably get rejected a bit. And then if it comes back and says from the candlestick pattern says, okay, I'm going to continue to 130, then I can continue 130. Sometimes you leave money on the table. Sometimes it's like you get out here and you don't have time to get it to 130. It just decides to keep doing that last $2. All right, you're gonna be okay with that. You're gonna be okay sometimes with leaving money on the table because what you did do is you took a clear target and you never want to enter without a target that you want to get out. So an exit strategy, right? So whether you either go for the 30 and you know in your psychology it's going to bounce on the 28 and you're prepared for that with how you traded, meaning you had enough time, you did whatever you wanted to do to prepare for that chop, or you're going to get out and potentially leave money on the extra $2 and be okay with that. It's all whatever decision you make, you just need to be okay with. All right. Now, do you have an options play where the kids are being dropped off or when they are being picked up or both? So this is Disney is the best example I'm getting right now of like them being picked up because I'm in this trade of them being picked up. So I'm coming down to the daily. I'm showing you guys this trade. And back from the daily perspective, if I zoom way back here, we have a few gaps, like actual Globex gaps within the chart. And that's all liquidity as well, these Globex gaps. So prices coming up through all of this to catch all that liquidity. And my signal was given to me on the weekly and monthly as the kids, come back to current price. Here we go. As the kids being dropped off in the fair value gap daycare. So when they get dropped off, sometimes when it's actively doing it, you'll be enticed to say, oh, it's coming to clear the fair value gap. I just want to come and do it now. You have to be aware that a lot of times when price is coming up through here, it may not want it all the way yet. And that could be risky. So you want to, have a little patience and giving it time to see, okay, if you notice that price coming up through there, do you want to trade right now or just wait? It could, knowing that, oh, this could be a moment that is dropping kids off. And when it's dropping kids off, that means it's pushing price through there and then eventually it's going to reject out and then price is going to leave it and be like, leave it. Like case in point here from the weekly, price left them there. Okay. Like when I say leave the kids, I'm talking about you leave them and you come back for them at a later date. Okay. More like, so I think from my 2-hour perspective, 15-minute, I say leave kids in the fair value gap daycare. But then on the weekly, we're leaving them in summer camp, right? The overnight summer camp is just going to take a few weeks before you got to come back and get them. All right. That's the psychology of a smaller time frame. You would expect it to come back for it sooner. All right. All right. So that's one example. There are some others as we go through some other tickers. If there are any tickers that you guys want to chart, like I can help chart it for you. You can drop them in the chat and I can find more examples of the kids in the fair value gap for you. And you can start to play with that psychology on your own. If you see it there, if I see, we can look at a chart and I can come all the way down to the 15-minute as well because it works there too. The 15-minute is just going to be, shorter holds for the same moves, but it works across every time frame if the signal is there, and usually price will come back for it. If the signal is there on the weekly and the 2-hour, price will most likely always come back for it. The daily can get iffy because the daily may not always come back for the entire fair value gap from a daily perspective. The 15-minute can fake you out and leave a wick in the fair value gap and not come back for a while. So if you get a signal on the 15-minute, the 2-hour, and the daily and the weekly. Man, if you don't take that trade, you sleep. Okay. So you want to make sure you take that trade. Because it will be there. What you'll end up seeing is God, and this works on Forex too, you guys. I did it very well on USD JPY. It was all there. It was just a bunch of levels. I can kind of go back and revisit it. So this is USD JPY, right? This is the USD JPY chart. And basically I'll remove the drawings from it. And this daily candle right here is basically what I took. And there was signals on the 2-hour that let you know price was just coming back for it. So what happened was, if I can kind of redraw, especially kids on the upside, you can really rely on those. On the downside, because price doesn't, we want a good, strong economy, right? The economy likes to stay more, bullish than bearish, right? So the downside, you got to be really careful for filling downward fair value gaps. But on the upside, meaning that you're seeing all the liquidity from a previous downward trend and prices now reversing to come back up. Oh man, those are the best ones. So if I were to draw the fair value gaps back, we had a fair value gap here. We had a fair value gap here. And with this one, the kids are in it because it's, three candles. 1, 2, 3, and the long candle is where in between the long candles where the wicks don't touch. And then when price came back up to revisit this, it didn't. What I'm trying to say, it left kids in it. This one left some bodies in it. I prefer to leave just wicks. So when I see it with bodies, I'm very, very patient, because it could take longer for price to come back to it. But once I get the strong, the strong bullish pattern to turn around, then I have more confidence that it's coming back for it. So I had that fair value gap. We had this one. There was a fair value gap there. And there was a fair value gap here with kids in it, because that little wick is left in there. So this is the one where there was nobody, just the kids. So I saw this and I saw price rounding back around. So this is what we would call like a cradle, right? Like a cradle, literally like a cradle, like a C. Okay. And when I saw price coming around and I saw fair value gap, fair value gap, fair value gap, kids left in a fair value gap, I said, I'm about to make a lot of money. And I entered somewhere down here, and then I held, and it did this little thing, and I just held. And then I had the stop loss alerts at the bottom for when price pulled back. And a lot of times the alert didn't even go off because I had one down here. I got in, I set one below this fair value gap. Price never hit it. So I just kept holding to go up. And I had an alert at the close of every fair value gap. And as soon as it got there, I would check price to see if I want to continue to hold, if price was giving me a pattern that I can continue to hold all the way up, or if it was giving me a reversal pattern and I should take profit from where I had. And so it just kept giving me signal after signal that it kept coming up. So I held and I didn't get out all until it came literally all the way up here. So when you see things like that, you take it. And then the extra conviction was on the daily. So if I come the 2-hour, see, I had all those little levels in the 2-hour. See my little squares right there in the 2-hour. But then look, I'm gonna draw over it. I had another fair value gap on the daily right there. So there was the daily, and then I had all these little levels. So then as price started to come up, the daily left this. Let me just drag this over. Okay. This daily candle here, March 12th, left kids in the daily fair value gap. Oh, it was a wrap. So I was like, yep. And I got in right on this candle, and I just rode it all the way up, all the way up. And that was all the confluence I need. And then because you also had another daily fair value gap right here. So when you have like 1, 2 right behind each other, they're like magnets. It's kind of like you can look at the fair value gaps as like magnet pulling price, as well as the order block. So if you really look at it, I have the imbalance, and then the fat order block magnet right there, because price is gonna order blocks pull price back to it too, because it's a level of resistance. So price needs to come back to that level of resistance and usually comes through all the way to the other side of that order block and clears it. So that's like 3 different signs of liquidity all in there, right? And then boom, profit all day. Like it's just boom. Shirley, I love the fact that you are peeping game and this makes sense to you. Love that. So that's a good example. So tickers that you guys want to look at, we can look at Amazon and Microsoft and kind of do a top-down analysis and see what we got. So it's the end of the month. So we are looking at monthly and Amazon, Randy, we're on Amazon, Lord of mercy. Amazon is approaching new all-time highs, trying to make new all-time highs. So at some point we'll need to draw some Fibonacci here. So those are my monthly fair value gap open and close. Then we come down to the weekly. I have this weekly level in between my monthly, so I'll label that one. All right. And then this was a monthly. We'll just keep monthly fair value gap open. All right. And then the daily on Amazon. Come down, come down. I'm just gonna mark the close of this daily fair value gap because it's closest to price and the closest to current price, excuse me. Okay, and change my line up here. And then let me come back out to the weekly because I know I have something back here. Okay, so for Amazon on the weekly, the monthly is nothing but wicks at the top. And for levels, as far as charting like a level using the horizontal lines, I would prefer a candle body versus a wick. So the weekly here, I am going to use this tweezer top to acknowledge as I don't have any fair value gaps at the top here. This is when I start to use candlesticks like tweezer tops usually. Usually that's the biggest thing I go for, a tweezer top, because that's like a tweezer top or tweezer bottom, because those are good like turnarounds. Reversal type patterns. So this would be a weekly tweezer top, and I would label it exactly as such. Weekly tweezer top, because it just lets me know what's there and that it's a level of resistance, right? And go from there. All right. And so Amazon, from just the weekly chart patterns, right? The candlesticks. So I got some levels in here, and now I'm just looking at the candlestick patterns. It is going, crawling up, I would say. Kind of just slowly getting up, but I would call these exhaustion candles a little bit, right? It's exhausting up. I do think it will finish and hit the top when I say finish, because all of this is like liquidity in this long candle as well. Finish the time period 183, right? If we come down to the daily though, we want to dissect. So anything that you find on a larger time frame, like a weekly, and it's like a tweezer or just like a long candle, you want to dissect that candle, meaning come into a smaller time frame and figure out what other candlestick patterns are there, right? And here, we don't have much based on what current price is. That's where the little dotted line is. We don't have many other like candlestick patterns in the way of us finishing. We do have this wick here. And I have gotten in the habit of acknowledging some of these small wicks. when I'm thinking of where price could like get rejected from or stall a little bit, that's going to be, these wicks are going to do that. So acknowledging them just lets you know, like when you're currently looking at current price and it's moving, it just lets you know, oh, okay, that's why, that's right. I got that wick back there. And that it just helps you know why is price doing this, right? Just helps you know. So we'll go from there. So I think, right now Amazon will come up and at some point it'll come down, but I don't know how choppy this may be. This be, like I said, daily fair value gaps with a bunch of wicks and a bunch of bodies in them. Not the best signal for a trade, okay? You're just gonna have to wait for a better signal for all of this choppiness to kind of settle. Or prepare itself in a way for the next impulsive move and trade the impulsive move. Amazon looks all right. It's not much. And then it was Microsoft, right? Microsoft was the other one. That one's on my watch list. I don't trade that one as much. All right, but I did draw a fib on it because it's moving up in a way. And I can go back and draw a fib on Amazon if you guys would like. But before I continue, I'm going to take a 5-minute break for myself because I need a 5-minute break, and then we'll come back and get into Microsoft. All right. 5 minutes. All right, that was more like a 2-minute break. I don't want to keep you guys waiting too long, but just a quick break. Um, and as of course you guys know, this call is being recorded, so I will post it for anything that you guys missed. But let's get back into it and let's get to Microsoft, and then I can go back over USD and USD JPY and Australian dollar um to USD, as well as far as currency pairs go. And we can, just look for some more stuff. Again, and this is just further teaching you guys the strategy that I take, or the concept and the psychology that I use to approach my charts and go from there. Now, because Microsoft is a bit more at an all-time high, I'll show you guys how I use Fibonacci. All right. Fibonacci, I think, is the best tool for all-time highs, because you don't know where price is going or how far it's going to go. And you need to take profit if you're going to. Now, you can, by all means, get in the habit of just trading the pullbacks. There's a lot of traders out there that just trade the pullbacks, and they are perfectly profitable. But if you are the type that wants to trade the breakout from an all-time high, you're going to need Fibonacci. Okay. So let's clear off Microsoft, and Microsoft is at um close to a high, kind of making a flag here. This is the weekly. So if we come back out to the monthly, right, this is what we got for Microsoft. So start with the same strategy and square off my fair value gaps from the higher time frame, right? Boom, and that's support. Resistance is just an all-time high level. And then we come down to the weekly, right? Weekly, we have a few other questions. I think a question I saw back was Globex gap. So in this case, it's not 100% Globex gap. Let me see. Globex gaps are physical, like, spaces that appear on the chart. In this case, right, where price, this is weekly, but price kind of jumped right from here to here and left this physical gap. Now price came back and put a wick through it, but ultimately it is a gap. And so these physical gaps or Globex gaps are these spaces, and it usually indicates that price moved overnight, pre-market or post-market, through some news. Since a lot of times it's news, earnings, events, and things like that can cause a chart to have a gap on it, because that means it would have did so much movement in pre-market or post-market when the earnings data came out, which moved price before the actual market opened. And so that caused the gap. So a lot of the gaps can create support and resistance with the gap itself. So we want to acknowledge when not only it's a level of like support, but it's also a gap. I tend to make my gap lines purple, because it lets me know that, okay, the other side of that level is a gap. And kind of go from there. It's a different type of support, right? Because it's just gap support. So for Microsoft, I'll acknowledge that the close of this fair value gap with a physical gap, since it's in there at 390. All right. Now, what I'm going to do is going to come down to the daily. I tend to draw Fibonacci's off of a 2-hour time frame, sometimes daily, but mostly 2-hour. This particular Microsoft, I don't like the way this chart looks. It did a lot of gaps and a lot of small candles and a lot of chop. So getting a very good swing high to swing low from the daily is a little tricky. So we're gonna come down to the 2-hour from here. And I kind of just want to pull the fib, and skip over this fair value gap right here, because it's so choppy in this area. And usually you would do both. You would still come in here, you would put your lines for your daily and then draw the fib, but I know the fib is going to come across this area. Okay. So I'll show you how it looks for demonstration purposes, but you can essentially take some of these lines off. Hold on. I'm going to keep that one purple because that 406 is a gap. And then let me make this one the opening of it green. Okay, at 411. All right, now coming down to the 2-hour, And you want a nice low to high move in order to draw the Fibonacci. So you're drawing it from point A to point B mentality, all right? And so your point A is going to be your point A to point B should be in alignment with the trend. Now, there are some exceptions to that rule. But in this case, we're going to go in line with the trend. The trend is kind of going up here. This is why I do it on a smaller time frame. So I'm gonna pick the most recent low. So you could say the most recent low is this one, but since price is kind of coming back down for it, I'm gonna come a little lower to where we have this nice little W pattern, this double bottom W, and where price broke up from there. So I'm gonna take that as a low, and then I'm as my point A, and then we'll pull it up to my point B, which is gonna be the high, the all-time high, the actual high, right? Okay, because I want to know where price will go if it breaks above this high. All right. So drawing this Fibonacci like this, we see that price is coming down toward this 50%. Now, price likes to get pulled towards this 50% of the Fibonacci. What the Fibonacci is, briefly, is a sequence. Fibonacci is created by a sequence. 0 plus 1 is 1, 1 plus 1 is 2. Each number being added by its previous number creates the Fibonacci sequence. The sequence can be used in trading to predict where price is coming to. And this prediction is given to us in percentage levels. So when you draw the Fib from low to high, you're drawing it from like 1 or 0 to 1 or 1 to 0, right? And then everything in between there is a percentage of that. And 50%, this red line is midway. And price tends to like to get pulled towards its 50%. Sometimes it won't make it. It can get stopped up and chopped up around the 38, depending on which way you're going. It'll be in between, 38 to 50 or 61 to 50, right? It just depends. But once it comes here, it usually likes to get stuck and then make a decision on whether it's going to turn around and go back up or continue down, right? When it comes to the all-time high, what you're looking for is for when price to come back up to the high where it'll go to next. So these extended Fibonacci levels are not just given to you. They take a bit of study, a bit of research to get, and then to perfect, because you can add additional levels in here wherever you like, and you have to find what works best for you. So these are the levels that work best for me, extending beyond the 0, negative 0.5, negative 1, negative 1.5, and extending above 100% at 1 point. Actually, I don't like this 1.23. I was playing around with that during live day trading call. Let me take that one off. Where'd it go? 1.3. No, I want the 1.3. I want the 1 that's right here. This one gone. Okay. So I was playing around with some stuff. 1.382, 1.618, and then 2, right? Going above. And you can see how these Fibonacci levels can be really close in alignment with your horizontal lines that you placed from fair value gaps. And that makes it really nice because it just shows that you're charting right, you're correctly as well. But this is what you like. So this is what I would like to see for Microsoft. So essentially, if support were to be held between the 38 and the 50%, or 416 and 419, then as price were to come back up to the all-time high, we would have a trade to 430 and potentially beyond, taking up to 445. We can make that next Fibonacci level a little closer by drawing the fib not from this low. I took this low, but from this one, right? And so if we took it from this dip to this high, I don't have my lines extending all the way in the back. And that's just a choice for my chart because I have too many lines going on. I don't want to clutter it. But if I look closely here, from this small low to high, and I like to take the wicks, excuse me, let me make sure I make that clear. I go from wick to wick with my high to low. All right. And then from this perspective, it's already came through the 50 to 61, right? It came all the way through there. And it could continue to the 78 if it wanted to. And then what it would do is as it turned around and came back to break up, your next target will be 440 instead of the 447. So I would suggest that you keep it as tight as you can if you're day trading. Your swing low and swing high tight, meaning your most recent to current price. So you can get the next best projection that it can go to without overshooting it. All right. So that's just like my word of thumb there. And of course, Fibonacci takes a little bit of practice because you got to kind of play around with it and play around with like this candle or this candle. Like it moves the lines a little bit. And you'll, as you play with it and see how the candles are bouncing off certain levels, you'll find what works best for you. All right. So that's a little bit of Fibonacci with Microsoft. Okay. Those of you who want to trade Microsoft, go for it. All right, back to USD JPY. Everything that I showed you guys. Let's take off that Fibonacci. And I have all these previous lines charted in preparation for USD JPY to come down. So I traded it all the way up. And I've been waiting for it to come down. Right now, I have like kids, potential kids, if you guys can look through all of my lines, right? I have kids in the daily fair value gap to the bottom, which is great. That tells me price is probably going to come back for the kids. But will it come back in a way that's going to clear this entire daily fair value gap? I don't know. But I do have a little bit of conviction that it might, because I have some more kids left in the fair value gap on a smaller time frame, like the 2 hour, right? All the way down here. The only reason why I can't be so aggressive with price getting there is because there is a nice order block in the way. And so this order block will catch price first before even considering this. So as much as you see the signals, oh, I got kids in the fair value gap, price gonna come down. Randy said it's gonna come down. Don't be naive to the other candlestick patterns on the chart. All right, this is a block. This is a level of support right there in your face. It has to break that before it can come for this. So where we are right now is we're trailing like a long flag up here. Usually flags like this from the daily perspective are an indication that price is going to continue to the upside. Just saying. I don't care that that wick is down here. If the kids really want to be left, they leave the kids, okay? You leave them jokers and you come back for them at a later date. So with USD JPY and the fact that we just recently broke up a couple days, like last week, and we cleared the daily order block here, we're on the other side of it, we're chopping up, we're taking a breath. As we cleared it, we take a breath. Now in this breath, I'm expecting us to continue up and potentially make all-time highs because this is a nice, strong V pattern, which is another strong bullish pattern. All right. I believe that price will bounce off the fair value gap here, but maybe not go as so deep as to like putting a candle body through it. If it does want to do that, I will get some type of strong bearish candlestick pattern here, some type of strong reversal to let me know, excuse me, that there's enough strength to push through all of this. All right. But from my candlestick analysis, I believe this is bullish and we're going to go up. And when I look at it from the weekly perspective, it also gives me bullish sentiment if I'm looking at the patterns. So for one, USD JPY, there's a lot, as I told you, the bigger the pattern, the stronger it is. Baby W's, big ass W's. There is a big ass W. There, boom, right there. So that's why the price was going up the way it did. Or a big cup and handle. Some of you may see a W here, right? The double bottom. It's not a perfect even bottom, but the W is still drawn there. And every time a W comes to the neckline, it usually makes a consolidation and continues from there if it's going to continue up. This consolidation can also be looked at, and like, again, make sure you guys are writing all these names down to these candlestick patterns I'm telling you about. These are some major ones. So you either see it as a W or a cup and handle. Where's my pencil at? Draw a cup. Here we go. Cup. There's the cup. And this level of consolidation is the handle. And there is, I like the way I drew that. It's kind of like my Blues Clues handy dandy notebook drawing, right? For every baby boomer, probably didn't get that. But for my millennials in the house, y'all know where I'm at. Handy dandy notebook cup on the Blues Clues charting. I don't know. I'm going all the way, all over the place, y'all. I'm so corny with my jokes, but this is what you guys see it, cup and handle. So that's a bullish pattern for it to continue up. So all of this on USD JPY is like, we're going in the right direction. And I don't want to delete these. Hold on. Delete that. Come back here. Okay. Because that's one W. And then we have another one. Just cleaning off this chart. Give me 1 second, guys. All right. And then our lows kept getting are constantly getting higher. So when we made the handle, the low is higher. We came down to retest that. And then we created another level that was higher than the previous one. And then we created another tweezer bottom that's higher than the previous one. And so a few things can happen here now that we're back at the top. We can either continue and break up, or we can be drawing a big M, right? M for to come down, right? So W's come up and M's come down. And if I put on trend lines again, you can see where I'm potentially going with the M. All right. And a lot of the times the chart loves to do big W's and then immediately make a big M. So just be mindful of that and mindful of the fact that I did mention these kids and fair value gaps at the bottom. So it does have liquidity, but in order for it to do a big M, it will obviously need to break past these smaller fair value gaps and everything else. So right now I'm just waiting to see what USD JPY wants to do and break out and give me some type of direction. Right now, it is a flag, and I don't care to trade that choppiness right now. Come down to the 2 hour. Let's see. I don't see any great moves for short-term moves. If the pattern breaks out downward from here, I would love to grab these two fair value gaps down here. There's no kids left in them, but if price broke out in the right way, it's liquidity that can be, I would say, grabbed, right? So price action will come down and grab it if it wanted to. You'll just be looking for candlestick patterns here in the top area to show that it's turning around in that way. This is a live chart. The Forest Factory is live today. So this is the fact that it's not filling this small 2 hour fair value gap. And like I told you guys, when it's small like this, it puts a lot of bodies in it. You want to just throw the whole kid theory out because you get a situation like this. And that's why you have to be patient. So when you see it, just be patient, give it a couple more candles. And remember, like, there's no FOMO. There'll always be another trade. So price when you really need to break past these wicks, meaning I need a candle body to come and close beyond these wicks to let me know that price is trying to come down. If I don't get any signal like that, I'm going to stay right here, meaning stay put, meaning out of the market is where I am right now. I'm not currently in it until price comes down. and breaks this level, breaks these wicks. So what I tend to do is put, you know, little other smaller lines. I may put them in different colors if I just need like an alert to be alerted. Okay, we are breaking past this level. Let me just take a peek and see where I want to get in. I place a lot of, you know, alert lines, I would say, on candlestick wicks or areas I think that the candle price action would break with the candlesticks. All right, and what was the other US? It was Australian dollar to US dollar. I put that in red, right? AUD, where is that ticker at? All AUD USD. You just make me go the other way. Seriously? There we go. I guess we'll just type it in there. All right. Okay. Does this look right? Yeah. All right. I don't trade this one a lot. I'm in the position to the upside with that pair. Okay. To the upside. Why are you to the upside? Nothing about this chart looks like it's going up. Like nothing about it looks like it's going up. Okay. So from the monthly time frame, I would assume at some point you would want to turn around, but I would have to get a bit of fundamentals of what's going on over there in Australia. Um, yeah, well, be careful about the news you trade. Don't trade the news, trade the chart. All right, so I have two fair value gaps like kind of right on top of each other. There's a little bit of space between here. That's cool, but they are, you know, I'll square off both of them because it's on the monthly, but they're small. Weekly, open, close, open, close. So the weekly, so I see all these kids. It has to want to come back up. So that's the other thing. Is once you're like, oh, it left kids. Oh, it just keeps leaving kids. But if it's not like for whatever reason, the currency pair, the stock, the whatever is not going up for whatever news is not going up to retrace it, it's just not going up yet. As much as you want to take kids left in a fair value gap, okay, please align that with a candlestick pattern that's about to break out in the direction you want it to go. So if in case in point with this ticker, we want it price to come up, I wouldn't enter. I don't have enough data here. So this looks like it's potentially coming back around, but I will want more, meaning I want more candles. I want the W to start forming here in some way. I want the cradle to come up some more. I want something else before I say, okay, yes, it finally looks like it's ready to come up here and take out the liquidity it left behind. Right now, it looks like it's stalling. It looks like it's just, here's the thing, I feel like it'll just keep falling. It doesn't look like it's trying to gain momentum in the opposite direction. When we come to the daily, a little bit, but from the weekly, not so much. Daily, a little bit. Still looks like it could chop sideways here and continue to break down. I'm not convinced just yet that it wants to be up. I will want, again, some more data on the 2 hour. I don't know why it's popping up on me. Probably because this is a fancy currency pair. Or, you know, because with TradingView, you sometimes need additional data packages to get certain data. So I don't know why that one's giving to me like that. But I digress because I only really trade USD JPY and I glance at some of the Euro ones. I don't really deal with the Aussie dollar that much. But I digress. I just need more with this. Like, it's not enough for me to hold long. I feel like I'll be holding it for a while. Luckily though, with Forex, you don't have options and theta and delta to worry about. So hold it as long as you like. For as many pips as you like until it turns around. That is the beautiful thing about futures and Forex. For those of you who are not on the dark side of futures and Forex, the benefit of it is you don't have a pattern day trader rule, meaning you can go in and out as much as you want, and you don't have a um well, I'm not gonna say you don't have theta, because you have theta if you play futures options, because you can play options with futures, which is, ooh, you making money. But you that flexibility to get in and out of the market when you want, because the market hours are longer. um your balances settle a little differently with futures and Forex, versus your stocks can take 2 days before your money settles. Futures is not like that. You're in and out, your money is right back ready for you to trade. So there's a lot of little pluses to trading Forex and the futures, that just gives you a little bit more opportunity to trade. The other reason why I like looking at them is when the stock market is acting up, then it gives me something else to trade because that USD JPY that was doing its thing like it's supposed to, was running up, while the ES was just like taking a really big breath and just kind of not going anywhere. So it opens up your options for those who want to stay. And like I said, this is your new 9 to 5 full-time employment journey. Trading multiple asset classes will help you out a lot. As one asset class is not doing something, the other asset class will, and kind of keeps you always making some money, right? All right. So that's pretty much all I have to give you guys for today. We went over the strategy. We went over how I trade here. Little tips and tricks that you could take along with you in your own trading game. I can't wait until the weekend is over and the futures comes back on. If there's anything else, any other like tickers or anything like that you guys want to bring about, as I'm using this as kind of like my Sunday school charting. So, um, to kind of go over setups for next week, right? And take a view of what happened. We can use this time for that. If anybody has any other tickers they want to share, just put them in the chat and I'll get to them. But what I like to do with what services the Traders Grid provides is we typically do a live day trading call when the market opens, like the stock market, because there's quite a few of us in here do love to trade the options and just regular stock tickers. And so we meet at 9 o'clock and do a pre-market analysis from 9 to 9:30, and then we trade live and see how the action's going and meet together. Um, between 9:30 and 10:30 is when we're looking for the best moves, and we trade those together. And then we also offer a Sunday school call it Sunday school, because we're learning on Sundays, and most of us have gone to church at least once in our lives, right? And so every other Sunday, right? Every other Sunday, we meet at 5 p.m. to just chart a setup for the week. We go through my entire watch list. We'll get every ticker on here, including any tickers that you guys love, just to chart them out. Like I said, kind of what I'm doing here today, whatever tickers you guys like, we'll go over it together and just get another opinion. And that's what we do on Sundays. And then we also offer the night trading that I am doing. It's a slow start, is learn trading psychology at night. So it's once a month on Tuesday night, we come together at 8 p.m. and I bring a topic that all of us can relate to or work through as traders, because it's learn trading psychology. So taking some time to focus on our mindsets, have some girl chit chat time also to talk about your trades and you like them, you don't like them, your journaling, all of that stuff comes out in those. And we can kind of have like a kumbaya session around a specific topic that we can all discuss and share ideas on, feedback, whatever you want to share, just gets shared. And then the end of that call does end in nighttime futures trading for looking at the night setup if there is a night setup. Not every night. There is a nightly trade that I can take overnight into the morning, but there are quite a few nights that I can do that, and those are lovely trades. So that it will get us started into more night trading. And those are the services that the live trading services, I would say, that the Trader Crib offers on top of a free live day trading event once a month in the morning, which you guys are here for today. Other things, if you guys joined the call late, I mentioned the natal charts that we are now going to be selling. So if you want to get a deeper insight of yourself from the perspective of astrology, you can order a chart, a natal chart. It is your personal chart. So that means I'm going through your chart and your planets and your alignment and coming up with your personal interpretation. And those are on sale today. And of course, we have the final biggest part is our course. We do have a course, and our course goes over the strategy that I just went over today. More candlestick patterns, all the different candlesticks that I think you should know and get familiar with. The course and community is a bundle, right? For $600 per year. Okay, so you will get the course, access to the course, all the videos for the course, Fibonacci, how to draw it, going into more detail about it, going over options, delta, theta, contract, like everything you need to know about options, different strategies around options, verticals, iron condors, straddles, strangles, right? All of that is in the course. As well as my Justinia put in the chat the flow chart strategy, where I have a flow chart that kind of helps you do a top-down analysis from the weekly to daily to the 2 hour, right? And looking for these kids in the fair value gap, daycare, these order blocks and things like that. So that's what the course goes into, all the little tricks that I have to the market and give them to you in the course. And then, of course, you have the community access as well with private Telegram. We do have a Telegram community that we are chit-chatting it up live, girls having fun. Let me tell you that, okay? It is sometimes it's a gift party. We just be communicating with each other in gifts about trades, but it is a resource that is there for the community to help you all trade. Ask your questions about anything, screenshot, share your chart, whatever you want to do. And then the final actually thing that I do offer with this community is when we have those nice Federal Reserve events, right? And it's just hot news, right? We're all excited. We're all waiting on the Federal Reserve to make an announcement. I will do pop-ups randomly, right? That won't be on the schedule. I have a monthly schedule for all of my scheduled events, like the live day trading, the Sunday schools, and the learn trading psychology. Those are scheduled monthly, right? So you'll always know when those are on. But when we have some fun news or Powell wants to speak about something enticing, I'll do a pop-up, and if whoever's available can jump on with me, and we'll do like a watch and trade party. We'll watch the news, we'll watch and see what Powell says, and we'll literally look at how what he says affects the candlesticks in real time. And and we have some fun commenting on that as well. So those are all the fun things that the Trader Crib provides as of right now. Of course, I'm open to growing it more and taking you all suggestions on things that you would like to see. And that's the Traders Crib. So I thank you all again for participating in today's free live day trading webinar. Welcome all the new faces. I know this call is like pretty long. I don't want to take up too much of your time, but I appreciate for everybody who came on and introduced themselves. So welcome again, Miss Shirley and Malia. And I really appreciate you guys. And I hope to see you all again. Okay. Any other final questions, comments before I leave? We dismiss today. Let's see.
Randy.
So, yes, I'm going back through the chat right now. Go ahead.
Yes, this is your auntie. I
Hey.
just need to say thank you for inviting me. I thoroughly enjoyed this. I love your nutsy psychology about the children and the daycare and your strategy. This was great. I'll have to join your next session when you have one. I know you will.
Yes.
And be on time. So
No problem.
much, niece.
Thank you, AC. Appreciate it.
You're welcome.
So let me go back through the chat and look at a few comments I missed. So Camille says, what broker account do you use? I use Thinkorswim / Charles Schwab. Broker, whichever broker you choose is your choice. You know, I'm not going to recommend any particular one. If you like it, I love it, right? I do use Thinkorswim, TD Ameritrade. There are a few traders in here that use E-Trade is a common one amongst the Traders Crib. Fidelity is another common one amongst the Traders Crib. And TradeStation. We are not really the Webull fans over here. Webull and Robinhood, we're like real traders. Yeah, that's a diss to all the Robinhood and Webull people. Yeah, real traders. Like the true broker, okay? But it's nothing against you if you do use those. They do work. They do work, okay? No problem. Other questions? Let's see. Kim, do you have to have a different account to trade Forex or options versus futures? Depending on your broker, that is a yes. So if you trade with TD Ameritrade, you can trade everything. You can trade futures, Forex, and the stock market. The only thing you can't trade with them yet is cryptocurrency. That's the only one you can't trade with Thinkorswim. If you use TradeStation, you can trade everything, including crypto, with TradeStation, right? Miss Shirley, you cannot use Thinkorswim with, you cannot connect Thinkorswim with TradingView. Okay. Even though this is TradingView that you're seeing on my chart, right? Because I love charting with TradingView. I love charting with TradingView. And then I ask you, like Deborah is saying, because Deborah is one of my VIPs here. We execute in Thinkorswim. So we'll use TradingView to chart, and then we execute in whichever broker that we're using. So, and I think a lot of us are doing that. A few of us may chart within the broker. I know for me, Thinkorswim has too many clicks on their chart. It's just too many clicks. I got to click in and out of the pointer and the drawing of the lines, and I don't like a lot of clicks. Okay. So that's my personal bias and preference to it. I find TradingView very user friendly, but you cannot connect that broker. The only brokers that connect are like TradeStation connects. A lot of the Forex brokers connect, like all of them damn near. But like E-Trade and Fidelity, they do not connect, right? A lot of times I am trading on the go. So you're like, Randy, do you have a computer? You sit at home? Yes, I have a computer, but I do trade on the go. How do you trade on the go? I trade with my iPad and my phone, meaning that I'll have TradingView on my iPad to look at the chart, and then I'm executing the order on my phone through my broker, right? That's all I need, and I'm good to go. Okay. Okay. Miss Shirley said the same thing. Yes. Thinkorswim charts are just too complicated. I agree. So you do need 2 screens, guys. If you're not going to use a broker that can connect directly with TradingView, I think you will need 2 screens. Either way, if you're trading options, you're going to need 2 screens because TradingView does not have an options chain. So even if you connect your TradeStation to TradingView, you're not going to be able to execute an options trade on TradingView, right? So you're going to have to still go through your broker to execute that options chain. There are a few hacks out there for the tech nerds out there that really want to get techy. There is a hack to connect it and execute the options. I looked it up, but I didn't do it, and I'm not advising that. I think there's simpler ways, but it just depends on how aggressive you want to take your trading. Any other questions, concerns, thoughts? Most of you guys, I didn't hear any new traders, but if you are new, other questions I can think of, like trading minimums. If you're trading options or you're trading stocks, there are no account minimums to executing trades. Their account minimums come into play when it comes to your broker and margin, if you're using margin versus a cash account. I do recommend, if you're a fairly new trader, meaning that if you have 3 years or less of experience, I would highly recommend a cash account with options approval, so you can trade against your own money and not be limited to the pattern day trader rule. A margin account in the United States with less than $25,000 in it is going to limit you per how many trades you can make per week. Day trades specifically, you can make per week, meaning in and out in that same day. To avoid that, you trade futures, you trade a cash account. And so I would highly recommend the cash account. Okay, guys. Trading futures does have a minimum. You're gonna need about $2,000 to start trading futures. Okay. So for people who are starting with small accounts, I would recommend stocks or options. You need a little bit of capital to start trading futures. All right. But if you have like $5,000 to start with, I would recommend futures. Why? Because there's overnight. You have more hours in the day to trade. You do not have a pattern day trader rule. The account will require margin, but you don't have the limits. You just don't have those limits. Just don't exist when you're entering and exiting futures. So I would recommend that. Okay. Trying to think of anything else. It's just like newbie, beginner traders don't other traders don't speak of these things enough. The how to get started that can make you intimidated from ever getting started. Oh, my only other final tip is for anybody who hasn't started, who wants to get started. When you go to open your broker account, please, please, please answer the investor profile like you've been trading for years. Even if you haven't. Really, the reason why is because you want to have as much privilege as you can when you're starting out to learn it without any limitations on your account. So the more experience you tell your broker you have, the more privilege they give you with your account to gain mastery. So that's how I'll leave that there. Of course, you guys can always email me directly at randy@thetraderscrib.com for any questions. You can schedule a 15-minute free consult booking with me for any questions on the website. I do not use funding, which some people are looking at me like, what, Randy? Like, oh my God. Like, yeah, that means I am a real trader, like really real. I'm trading most of my own money. And that takes another level of discipline and skill to do so. Okay. Any other questions? You guys are coming up with good questions. Good questions. You either put them in the chat or you can jump on mic. I don't want to cut you guys off too early today. Make sure I get it all in. All right, guys. Well, it seems like that's it. You guys have a wonderful, blessed Easter weekend. I look forward to all the new faces being members of the crib soon. We would love to have you and get your trading on its way. Other than that, you guys take care. God bless, and see you guys next week. Bye.